So the exit tax, you've probably heard about it. Rachel Reeves was considering a 20% charge on wealthy people leaving the UK, a settling up charge on their assets or unrealised gains before they pack up and relocate to Dubai or somewhere that has open arms for the mega rich to settle down. And you know what? On paper, it sounds brilliant. It sounds fair. The mega wealthy built their fortune here using UK infrastructure, our workforce, our tax reliefs. So yeah, make them pay up before they leave for, these low tax paradises. That does seem reasonable. But this actually impacts anyone who dares to dream of living abroad. Now, the big problem with this whole idea anyway, and it is a big bloody problem, the mega wealthy, they're far too smart because they can pay for even smarter, greedier people than them to play the game. They've already left before anything would have been introduced. They've got armies of lawyers and corporate tax advisors making sure they're out that door way before this exit tax would have ever landed. And with the latest reports saying the whole idea has been scrapped anyway, the Treasury's reportedly backed down after lobbying from business leaders. So the attempt once again to actually tax the mega wealthy and huge corporations falls on its knees. The thing is, this isn't about the exit tax. This is about a pattern that we've seen for decades, a pattern that's going to get a whole lot worse heading into the future, because the government will always give up on the ultra wealthy. They're always just going to come after you instead. Could be a business owner, someone who's self-employed, someone in PAYE, an everyday person. Because even if they don't introduce these types of measures like the exit tax, just the talk about it has those mega wealthy on edge, and they make plans that if anything does change, they will just leave. There's Herman Narula, worth over 700 million, founder of Improbable, a 2.5 billion tech company. British citizen, studied at Cambridge, built his entire business here, and he's apparently preparing to leave. Now there's also people like Nick Storonsky, CEO of Revolut, one of Britain's biggest fintech success stories, already moved to the UAE. That move could save him billions in capital gains if he does sell his stakes. And then there's Robert Edmiston, wealthy British businessman, Brexit donor, estimated worth around 855 million, apparently considering a permanent move to Australia. And one of the reasons, a tax system that doesn't heavily tax success. And this isn't just about individuals. Over 1,000 startup leaders have signed an open letter to Rachel Reeves warning that the exit tax risks sending the message that entrepreneurs just aren't welcomed and they should either get out early or not even come at all. Now, reports suggest that up to 16,500 millionaires are leaving the UK this year alone. That's not in 5 years, that's right now. So the reality is, by the time the government could actually implement something like an exit tax, if they ever do, the people it would be designed to catch would have already been long gone. They've already got the resources, they've got the advisors, they've got options. And you know who doesn't have those same options? You, me. The small, medium business owner, the self-employed, a consultant perhaps earning 80,000, a freelancer, someone with a limited company, a person who's running a successful but not a mega wealthy business. That's who gets caught, because you can't uproot to Dubai or anywhere else because you've got family, you've got commitments, you've basically got a life here. Now the thing is, this has happened before and it will happen again because the government does need money. They have this massive fiscal black hole, which is anywhere between 20 billion and 50 billion, depending on who you ask. So they're going to look around and they're going to say, oh, well, who can we tax next? The first instinct, the mega wealthy. It does make sense politically. Tax the billionaires, tax the people leaving, exit tax, wealth tax, high capital gains. It sounds great on paper. But when the reality hits that those mega wealthy mobilize, business groups lobby, letters get written, meetings happen, and the government quietly backs down because they know, deep down, they do know that if they push too hard, these people will leave and they will take their companies, their investment, their jobs with them. So what happens next? They pivot to go after the easy targets. They start off trying to tax the mega rich, realize it's too hard, and then they use those same rules against you and me. Now, there's a lot of budget speculation going on right now. It is all over the place. Lucky enough, not for too much longer. But there's talk of income tax rises. That obviously doesn't affect billionaires. That targets anyone earning a wage. There's talk of lots of national insurance changes, whether it be landlords for rental income, working pensioners, self-employed, people that are taking risk. They don't get any employers' allowances. They don't get paid holiday. They're being scrutinised for national insurance. There's also limited companies, limited partnerships. It could be like doctors, lawyers, suddenly facing massive national insurance bills for profit distributions. There's also salary sacrifices being capped potentially to just a couple of thousand. There's cash ISAs that are up for grabs, 20%, that could be slashed all the way down to just 4K. So if you're trying to save, not really anymore. There's talk of the VAT threshold being slashed from 90,000 all the way down to 30,000. That would bring 1 million more small businesses into VAT. That's hobby businesses, side hustlers, people doing this to get by. And then there's inheritance tax expanded. That 7-year gifting period extended to 10 years, lifetime gifting limits. There's also making tax digital coming in April 2026, 5 submissions instead of 1. All of these things that are being spoken about, all these things being implemented, none of them impact the mega wealthy. None of it. Because billionaires don't have rental properties, they have rental portfolios in corporate structures. They don't do salary sacrifice, they take dividends. They don't have cash ISAs, they have offshore trusts. They don't hit that threshold because their operations are way beyond that. Every single one of the measures that I just spoken about that is being speculated, these affect people that earn between 30,000 and typically 150,000. These are small business owners, landlords with maybe 1 or 2 properties, self-employed consultants, people who work their asses off basically, that take risks, create jobs, and fuel our actual economy. So why does this keep happening? Why do they always give up on the wealthy and come after you instead? Because the system is broken, ultimately, and they know it's broken, but they do need money anyway. The brutal truth is the mega wealthy have the real power. They have mobility, they have options, they have political connections, they have fund campaigns, they employ thousands of people, they own media companies, they can pick up the phone to ministers. So when the government threatens to tax them properly, they push back, and they push back hard. And the government, in some cases, they just have no choice but to bend the knee every single time. But you and me, we don't have that kind of power. We can't threaten to relocate our entire families, our business in Singapore. We can't lobby number 10. We can't make campaign donations. We can't threaten job losses. So who's the easy target here? The ones who can't fight back effectively. The ones who will just pay up. Complain about it a bit, maybe vote differently next time. But ultimately, we'll pay, while the mega wealthy, the ones who structure everything offshore, will pay minimal tax and get away with it. And let's be honest, there are parts of our society that don't contribute to the system at all. I'm not going to list them all. You know what I'm talking about here. But people that haven't built anything, people that have never taken risks, people that don't create jobs. But the majority of people that sit in this kind of middle area here, the ones that do or are trying to build businesses, creating employment, generating wealth, paying taxes, you get squeezed in every direction. The ultra rich avoid it. The bottom of the system, they obviously can't pay it. And then everyone else then in that area, that middle gap, fuels the whole broken system. Everyone knows it's broken, but it's not changing because changing it would require a huge amount of political courage. And there's really no government that seems to have that. So let's come back to this exit tax for a moment, because even if it had gone ahead, who would it really have caught? The Treasury was modelling it to raise 2 billion. Now that sounds like a lot, but think about the numbers. If it's catching the mega wealthy, shouldn't that be quite a bit more than 2 billion? Because we're talking about people who have hundreds of millions in unrealised gains. But just 2 billion suggests, they're only catching, not many people. And certainly not billionaires, because billionaires, they'll be long gone. So who would get caught? Quite potentially the business owner with a £5 million company who wants to maybe retire to Spain, an entrepreneur with a £10 million stake and fancies, a few years in Portugal, a successful consultant who's built a valuable business and wants to move to France. Now, they aren't mega wealthy people. They're successful business owners, people who've worked their lives to build something. And if they want to move abroad, for their family, for their health, for their lifestyle, they shouldn't be getting hit with massive tax bills on gains that they haven't even realized yet. So whatever the threshold would be if they were to set it, it would probably be way too low, just like most of the other thresholds they set. That non-dom regime was supposed to target the ultra wealthy, but the thresholds caught loads of normal expats and international workers. Inheritance tax was supposed to be for the rich, but frozen thresholds means that normal family homes now get caught in that. Ultimately, every single time, the people who get caught up in these policies are the ones that it was not designed for. That's the collateral damage. So let's get practical, because I don't just want to go on about things that I or you can't actually change. I want to help you protect yourself, because if you're a business owner, if you're self-employed, if you're doing anything basically outside of PAYE, in 2026 and onwards, things can get pretty brutal. The squeeze will be on. HMRC are ramping up compliance. There's Making Tax Digital that's rolling out. The budget is going to bring more tax rises. We know that. The pattern is clear. And all that really means is they're coming after you. So here's what you have to do. There's two things. Couldn't be more simple. And the first thing, I'm sorry to say it, but it is compliance. You can't afford to be non-compliant, because that does make you an easy target, because HMRC are going to be looking for easy wins. So you need to just make sure you're bulletproof. And that means that you document everything, you maintain proper records, you submit on time every time, you don't miss deadlines, because late filings means one thing: penalties. Every late submission means fines. And with MTV coming, you've now got 5 submissions instead of that one. So that is 5 chances to mess up. You need to know what you can declare, what you can't. You need to understand thresholds. Because at the end of the day, I don't know is not a defense when it comes to compliance. It's not optional, it's survival. Now, the second thing is tax efficiency and strategy. If you're just compliant, you're still overpaying. You need to be tax efficient as well. And let me be crystal clear about what that means, because it doesn't mean dodging tax. It doesn't mean hiding income. It doesn't mean offshore schemes. I mean understanding the rules and using them properly, claiming everything that you're entitled to, structuring your affairs in the most efficient way legally possible, making sure that you're ultimately paying exactly what you owe, but not a pound more or a pound less. Because the reality is, you're struggling. We're all struggling. The cost of living is up. Business costs are up. Taxes are up, and they're going to be going up again. Margins are going to get squeezed, and it's only going to get worse. So you have to squeeze every single pound that you're legally entitled to keep. You have to maximize your pension contributions. You have to structure your business properly. You have to use allowances. You have to plan ahead, because the government isn't going to help. HMRC isn't going to tell you about reliefs that you're missing. They're not going to suggest better structures. They're not going to make this easier for you. And the mega wealthy, they're not helping you. They're too busy moving to Dubai and wherever else and paying zero tax while you're here picking up the slack. So you have to help yourself. You have to be smart. You have to be efficient and strategic. You have to protect every pound, because nobody else is going to be looking out for you. Now, I get this is frustrating, and I get that it feels unfair, because in reality, it is unfair. You're the people that are building businesses, creating jobs, taking risks, working 60-hour weeks in some cases, investing into our economy, generating wealth, not just for yourself, but for your employees, your suppliers, your community. Meanwhile, the ultra wealthy are playing a completely different game. They've got their money in trusts, offshore structures. They're not in PAYE. They're not hitting tax thresholds. They're minimizing everything. And when the government threatens to change the rules, they just leave. And then there's the other end of the spectrum. The people that haven't built anything, have never risked anything, have never contributed. That is just consuming resources, taking from the system. And ultimately, you're stuck with the majority, funding both ends. That's the reality. The system is broken. Governments, they know this. And it's not just our government, it's any government. They know it's far easier to tax the majority than it is to tax the top or the bottom. Because if they were going to try and fix these things, it would mean confronting vested interests. It would have political risks. And so they don't fix it. They just keep squeezing the easy targets year in, year out. Budget here, budget there. It doesn't matter. New taxes, new compliance, new admin, more costs, and ultimately, everyday people, just more stress. And the thing to understand is I know I'm no different to anyone else. Complaining about it doesn't change it. Getting angry doesn't change it or stop it. Hoping things will be different from a new government doesn't change it, because this pattern transcends political parties. This is all about power. And the majority of us, we just don't have it. So what can you do? Well, you can adapt, you can prepare, you can protect yourself, because if the system won't change, which it probably won't, you have to change how you operate within it. That means getting serious about your structure, making sure you're set up properly, whether that's limited company, sole trader, partnership. Each has obviously different implications, each has different tax treatments. So are you in the right one? It means getting serious about, your record keeping, MTD coming. Are you ready? Have you got software? Are you in a position where you're in control of what you can control ultimately, and you're not going to be scrambling around come April 2026? It means getting serious about tax planning, not just filing your annual return. Planning, look ahead, make sure you're utilizing any allowances, make sure you're timing your income, you're maximizing deductions, and you're utilizing any type of relief that is available to you. And for a lot of people, that will mean getting professional help, because tax legislation can get complicated. Things are constantly changing, and there is always going to be that chance you're going to be missing things, so you could be overpaying. So the key thing here, and I won't go on about it too much, but if you need an accountant, make sure you get a good accountant, someone that's going to be spotting opportunities for you, understands things such as structure. They understand how they can keep you compliant, but also keep you tax efficient. But here is, a fundamental belief. You should, and we should all absolutely pay taxes. We all have an obligation to contribute to our society that we live in. The roads, the schools, the NHS, all these things need funding. And so we will always have that obligation. And in 2026, with HMRC, the government changing things to make it harder to squeeze us even more, we need to make sure that we're paying just exactly what we owe, nothing more. Now, if you are one of those that is sitting there and you're thinking, you know what, I do feel like I might be missing something. I don't know if my structure is optimal. I am kind of concerned about MTD. I just want someone who actually understands this kind of stuff to look at my situation. If that's the case, then feel free to book a call with us. So to wrap things up, the exit tax isn't probably going to happen for the moment. They'll bring it up again and it will probably disappear again. The mega wealthy are going to be leaving anyway. They always do. And you'll be the one left holding the bag. But you don't have to be a victim of this. Stay compliant, stay efficient, protect every pound, because nobody else is going to do it for you. Now, if this video has resonated with you, please do hit the like button, subscribe for more content like this, and drop a comment letting me know, are you seeing this pattern too? Are you feeling the squeeze? Let's talk about it.